Good morning, everybody. It's nice to see friends and meeting new friends this morning. And we have a very esteemed panel. I'm an honor to have on board with us. And if I may introduce to you somebody who I last saw pre-pandemic, was also moderating an event in my old life. Can we call on stage, please, Mr. Ed Francisco, the chairman at the BDO Securities and president at BDO Capital. And can we call on Joey Roi Bondoc, the director and head of research at Colliers? Round of applause, please. Claro. And of course, Andro Leo Beltran, the vice president and head of business development and market education at First Metro Securities and Brokerage Corporation. Ladies and gentlemen, our panel for this morning will try to keep it engaging. I'll start. Maganda yung, there was a question earlier. How do you fund the investments for the hotel expansions? And I think it's a very timely thing. But just again, as a tail dived out from the first panel to this panel, let me ask my favorite inquirer and other columnists, and he certainly makes my Saturdays. And my Saturday, like last Saturday, was not complete because I did not read his article in the Inquirer. But he told me he's also in other publications, but I only get to read the newspapers on Saturdays. But anyways, Joey, my idol, my first idol for this morning. How would you describe the current outlook of the hospitality or tourism sector?
Well, overall, we're very optimistic with the hospitality sector in the Philippines, in Metro Manila. For instance, we're seeing tremendous increases in terms of average daily rates and occupancies. At the height of the pandemic in 2020 and 2021, occupancy, for example, in Metro Manila plummeted to only 20%. That's a far cry from about 70% that we recorded in 2019. Of course, we understand that because 2019 was also the year when we attracted record high number of foreign tourists across the Philippines. That's about 8.26 million. So right now we're at about, 7.7 million. That's a forecast of the Department of Tourism for 2024. We attracted about 5.45 million last year. So speaking of average daily rates, we're also seeing improvements, about 4 to 5% increase across Metro Manila. And then right now, from 20% at the height of the pandemic, we're at about 63% occupancy across Metro Manila. So we are doing very well. And for Metro Manila alone, we're seeing a record high completion of new hotel rooms. This year, that's about 4,600 new hotel rooms that will be completed in the capital region, and that's a record high. 2024 will be a banner year for hotel completion, and there will be about 2,200 new hotel rooms that will be completed every year from 2024 up to 2026. So what's encouraging and what's really interesting is that out of those new hotel rooms that will be completed, nearly 40% are foreign brands. So I think that only entices a lot of interest, not just from the local brands such as Seda, for example, but from the foreign brands as well, the Marriotts, the Accor brands, to further expand, again, in Metro Manila, but also in key tourist destinations outside of the capital region, including Cagayan de Oro, which recently also has been attracting a lot of new foreign hotel brands. So we're very optimistic. And again, I know that my colleagues here can discuss the technicalities into REITs, but we believe that when it comes to infusion of assets into these REIT companies, definitely hospitality sector will be a major game changer.
Thank you, Joey. Now you know why he's my favorite columnist. No? But of course, if I talk to Claro, or if Claro was in my panel, I would say it's Claro. But again, you did mention something, Joey, that there's a lot of foreign brands that actually come in. But we know that there's still the local players or the local investors who do the capex for this one. So my question now to Ed is that would you say that a REIT is a good source for funding? And number two, if you can walk us through how big is the REIT sector right now in the country?
Thank you. Good morning, everybody. I'll just try to keep it short. But basically, the REIT market in the Philippines is already around 50 billion pesos. There are around 7 REITs in the country. I think 6 of them are real estate related, mainly commercial. And then there was one which is power. I did 3, I think, of the real estate, and I did the power. We wanted to try power to see, because we wanted to prove that as long as there's steady cash flows, you can do a REIT, and we succeeded that with the Citicorp REIT. As Otando said, it would be nice if there would be somebody who'd want to do a hospitality REIT, because we're very supportive of that. So generally, from an underwriter and distributor perspective, supporting what Joey said, as long as you have an operating project with steady cash flows, a REIT is a good way to raise capital. Okay. In the first panel, they talked about the high returns and everything. Remember, REIT investors are looking more for steady cash flows rather than the big upside. So for example, I'll just give you an example. If you already have a portfolio of assets that are operational, diba? You use a REIT not really to raise capital, more for expansion. But if you're a startup, you're not a REIT target yet, because you have to have strong operating cash flows. But if you have strong operating cash flows from your existing projects and then you want to expand, I will do the REIT for you, because the money you raise from the REIT can be used for expansion. So that's how it works. Because look at it this way also. I don't know what your returns are as the owners, or maybe Hanky nga can make, let's say, double-digit returns. If you're an investor, and I would guess, no, because remember, from the investor side, if you can make now maybe 1 or 2% or 3% above the government rate. Government rate now is, let's say, going down to 5.5% for a 5 or 10 year. If you can give me a REIT that will give me returns of, let's say, 8 or 9%, that will fly. Okay? So meaning, if you can make, let's say, 12% from your investments, you don't have to give the 12% to the REIT. There are ways you charge management returns. Example, you're 12%, so you charge 3% management fee. So that pagdating sa REIT, the REIT na lang will pay 8 or 9%. The REIT investors will be very happy as long as they're consistently paid. You still make your 3% override for the part that you sold, and you still make your 12 or 13% for the part that you retain. And then there's a tax arbitrage, because this can be one-on-one. Your taxes will go lower because for the REIT that you sold, you only pay effectively, instead of the 30% tax, you pay only 0 tax. Because it's 90% is required to be dividend out. So dividends only pay 10%, no? 10% tax only. But if it's a corporate, 0% tax. So there's a tax arbitrage. You gain, you make a management override, and then you gain pa from paying lower taxes, and then you get the capital from the first time you sell the REIT for your expansion. So that's the way it can work. Of course, ideally, sana you have not just one project. Ideally, maybe at least 2 or 3 projects. Para there's diversification, so that when a BDO and a First Metro and the other banks help sell it, it's easier. But it's very positive. I encourage you to do that, because there's growth, and we believe that there's a dearth nga in good hotels, and tourism projects. So if you do that, please talk to us. We'll help you.
Thank you, Ed. Andoy, moving on. What's the potential for hospitality in the REIT sector?
Oh, when you talk about potential, especially here in the Philippines, where there's really none when it comes to hospitality-centric REITs, we have so much potential. The first panel talked about the Philippines being favored when it comes to local and international tourists. When it comes to REITs, I don't want to say the sky's the limit, but we have so much potential. First off, please let me, for context, it's best that we appreciate this from a basics kind of perspective. The REIT law was actually passed 2009, so it's been that long that the REIT law has been passed. But the problem is it was only enacted 2020. It lapsed into law. So it was only 2020 when the Philippines saw for the first time REITs. That's why from an asset class standpoint, REITs are the newest kids on the block. We were so used to, the Philippine investors were so used to stocks, bonds, mutual funds, unit investment trust funds. And then come October 2020, we were able to get a glimpse of real estate investment trusts. This is different from investing in property stocks, because when you invest in property stocks, you basically co-own shares, publicly listed shares of that particular stock. When you invest REITs, you actually co-own shares of the real estate investment trust corporation company. The mode of income, the way you make money from REITs is basically from two general sources. As Ed mentioned kanina, you can make money from capital appreciation, price appreciation. But most of the time we actually market REITs as a dividend play. Most of our investors, be it retail or institutional, most of them actually go for it for dividends. The lowest, as of end August, I think, the lowest dividend yield out of the 7 or 8 REITs in the market is doing 6.8%. The highest raking up to 9.15%. So when it comes to, if you're going to compare versus their fixed income counterparts, it's really worth looking into. But the problem is, as mentioned over our discussion, the problem is you have very little options. So you have very little room, when it comes to choices, because most of the REITs available in the market right now, they're concentrated on commercials, office spaces, malls, not so much about tourism, targeting tourism and hospitality. That's why when you talk about potential, when you talk about growth, when you talk about room for growth, that's where we are heavily excited. That's where we are really excited about, because it's going to, unlock the potential, not just of CBDs, not just of the really developed areas in the Philippines, but also those from the far-flung areas. So when you talk about development, talk about potential, it's really, I'm really looking forward to the next 5-6 years to see how this REIT sector can potentially grow.
And as a follow-up, though, what is the value right now of the REIT market in the country?
Yeah, as mentioned by Ed, it's a 25, 30 billion sector. When it comes to market cap, it's doing 240, 250B. But again, it's still dominated by the big players. No? I think Joey can also attest to this. You're looking at out of the 8, you have 3 or 4 big players with a huge land bank, with lots of properties in their portfolio. So it's really, when it comes to growth potential, when it comes to infusion, as mentioned by Joey, it's practically all about transferring an asset from one pocket to another. But that's the name of the game. That's the advantage of the big players. No? But what's good about that is the potential for small players, for example, is that they'll be able to be more attractive to investors who are looking for the non-conventional, non-traditional properties.
Siguro I'll expound on that later as to how smaller. But again, there's a question of what is small and what is big. No, I'll go get back to that later. In the meantime, Joey, would you now say that property developers should have as part of their portfolio the hospitality sector, or are you already seeing that right now?
Definitely. I believe that it's the way to go for a lot of developers, because we believe that diversification is the name of the game in terms of really expanding their REIT portfolio and making sure that their REIT assets are performing very well. Because if you look at REIT companies right now, of course, they're infusing recurring income generating assets. And given the potential of the leisure sector of the Philippines in terms of average daily rates, in terms of occupancies, the potential and the growth opportunities really are tremendous. And given that we're expecting 7.7 million international arrivals this year, 12 million in 2028. And not only that, you're looking at the infrastructure projects of the Philippine government. And previously, we were only dreaming of 50 million airport capacities. Right now, the new Manila International Airport will have an annual capacity of 100 million, initially 35 million, and then 100 million, the expanded NAIA. So from 35 million to 62 million. So just imagine all these expansion, improvement in infrastructure, connectivity. Definitely, this will play an important role, an integral role in terms of improving our travel and tourism competitiveness, and eventually make sure that the developers really bank on these growth opportunities. And then hopefully, they also see the potential of eventually infusing their hospitality assets into their REIT vehicles.
Thank you, Joey. Talking about airports, no? Hopefully, after this weekend, we hope to aspire for a better service, no? Anyways, yesterday I was reading this article, says that travel and tourism actually slows down your aging. No? If you notice, three of us have silver hairs. No? Shh. we'll do a count later how many of us would. But anyways, no, Ed, what would be the pitfalls for investors to watch out for in the hotel sector as a whole or tourism, and on the REIT side? What would be potential risks or pitfalls for investors?
Potential risks. Generally, no, from an investor perspective, the way the REITs are structured, there's a lot of protection kasi you have the fund manager, the property manager, and diba? So there are layers. So in a way that adds to a little of the cost, but it ensures that at least there's governance and then there's sustainability there. So that I think is already in the way it is designed that protects the investors. And then the other thing, as Anto was saying, was that the key also really is what you put in. Because, and maybe Joey also said, you have to diversify. Because, for example, if I did the REIT pre-COVID for malls, before kasi, diba, the name of the game, malls, that's always growing, it's everything. And then if it got hit by COVID, then suddenly nobody could go to the mall. So, diba, if you invested in a mall REIT, if one was done pre-COVID and then during COVID, it was closed, you'll have no dividends because it was losing money. So same thing also. If you invested in one of these REIT companies, one of the 7 that has POGO, and then if they disappear by December, suddenly the revenues of that REIT will disappear or partially will disappear because of the POGO if they're not able to replace it. So the key is you invest in something that has that consistency, the diversification. So that's really the risk. But then on the other hand, I just wanted to advertise a little. No, I guess the key is that on September 15, when is September 15? A few days from now, San Miguel will take over the NAIA, right? I was the one who led in the financing for NAIA. So I believe in that. I know the numbers. When the government was speculating na hindi kayang bayaran, DOTC called me to say, are you really behind San Miguel? Can they do it? So that's how comfortable we are. We know the numbers. I'm that comfortable also because I was the one who led the financing for Cebu Mactan when it was privatized by Mega World. And then I was the one who led to sell it to Aboitiz. So I know the airports. I know what the strength of the airports are. Even the different plans for Lagindingan and everything, they're very critical for you because we need the infrastructure. I'm the one also who leads the financing for the tollways because we need the roads to get you there. Because the big problem, di ba, over tourists is the infrastructure to get to this destination, they lose so much time. So if you're coming from Hong Kong, you want to fly directly there. So those are the things, the other things we're trying to do. We're also lending to the different companies because if you're a hospitality company, we realize you don't only lend to the chain. You have to lend to the, example, The supply companies that provide the vans to the airports that are mom and pop, we lend to them. We have to lend to the different, even the, what do you call this? The mga labandero. Because usually the tourists will have outsourcing of the laundry. So we have to lend about that. There's a huge ecosystem, but don't worry, the banks are there to support. We understand how big this is. We want it to succeed. So it's really exciting. The risk nga lang, you have to study your project talaga in your market. But if you really study your market well, and I believe in what Joey's saying, the tourists will arrive, it will increase. I was in a meeting with Francis Gotiano of Philinvest Group. He was talking, I didn't even realize that the Philippines has the highest, tama Joey, maybe you can validate. He was saying the Philippines has the highest dollar per revenue now of tourism. I was surprised because I thought we were low. I thought we were parang more the backpacker revenues, but he had statistics and it was very high. For me, that's a very positive sign because from you as developers, that means that there's money coming in talaga in the Philippines when they spend per night.
But is that market right now dominantly local market, local tourists? Is that what we're seeing for at least for now? No.
What we're seeing is local and foreign, which is good. Now, of course, the foreign have not been as much, but we're expecting them to grow. Kasi that's why nga when I looked at the projections of Cebu and NAIA airports, because I had to study them, there's a big mix of local. We're increasing the local flights, diba? But even the international is there. Another reason why I know the numbers, because I'm also the one funding the casinos. I have to know the number of the junkets coming in, the foreign players. Because if the casinos are relying on the foreign big players, we have to know those numbers. So kumbaga, at least we believe in the Philippines. We're invested in tourism because even here, the money makers of the rooms are not the rooms itself. The money makers are the players, diba, in a casino. So in an integrated resort, if you have the players, or I also just funded recently the Soler in Quezon City. We have to believe in the numbers. That's not gonna come from foreign. That's gonna come from local investors, diba? Kasi that's Manila already. That's coming from Northern Luzon. It's not supposed to cannibalize Soler here. It's supposed to be a different market. So we believe in those things. And I hope maybe my colleagues here will also, in the panel, will elaborate more.
Yeah. The other day, the PwC came out with the CEO confidence level. No? So it's the high on the list is actually the infrastructure, which you talked about. We're all excited, of course, on how things will change in our premier gateway, especially as the holidays lumabas na si Joey, si Jo Marichan, no? Then the second is actually consumer confidence, no? Which is what you're talking about right now. And of course, the third is, no? But the third is actually foreign direct investments. So I guess, to Andoy, what I've been hearing here is that the REIT may not be for everybody. And obviously, as Ed mentioned earlier, you can fund your first project from your REIT. You should have a track record. So, and as we know, before Siargao became Siargao, there's a lot of smaller players. How can smaller players actually come into this market? And here, you did mention a word, unlock, earlier. How can we unlock the full potential of the tourism sector by, through REIT? Is this the way? But we're here. What I'm postulating is that if you have all of these smaller players come into the picture, then it will be exponential.
Yeah. Please allow me to answer that question by taking you back to 2020, the pandemic. No? During the pandemic, we realized so many stuff. During the pandemic, we realized the importance of space. Not just to isolate ourselves, not just to isolate a member of the family, but we realized the importance of space by distancing ourselves from other people just so we don't get the virus. So space is number one. Number two, we also realized the importance of wellness, both financial wellness, physical wellness, and even mental wellness. That's why during the height of the pandemic, very, very pronounced yung movement for mental health. No? I'm starting my response with that in mind, because when you talk about the potential for small players, it's actually going to go beyond CBDs, beyond the developed areas. It's really the far-flung Siargaos, the far-flung La Unions, no? Because if you're going to look at the demographics, and if you're going to look at statistics, really both local and international tourists are really heavy on the non-traditional tourist destinations as well. You have lots of influencers, you have lots of vloggers, both local and foreign, talking heavily about the undiscovered gems in the Philippines, and that's very important. For us to be able to tap into that market, you really need developers, you really need small players who are willing to go there. And we're not expecting the big players to prioritize them, because they're heavy on CBDs, they're heavy on income generating now. But when you talk about potential, when you talk about the small players, it's really worth looking into. But the problem is, again, the land bank, the properties, and at the same time the requirement for them to be able to put up a REIT. That's why the second part of my response would be, you also need to understand that the REIT industry in the Philippines is still in its infancy stage. It's just latter part of 2020. We've yet to celebrate the 5th anniversary of the oldest REIT in the Philippines. So we're just getting started. What I'm trying to say here is, I wouldn't be surprised if the REIT industry in the Philippines gets to follow the footsteps of the UITFs and mutual funds that eventually offer bits and pieces of everything. Back in the day, we were introduced to mutual funds and UITFs na super plain vanilla. Just bond funds, equity funds, balanced funds, and then that's it. And right now, you look at the market, you have focused funds on certain areas, certain regions. You have even REIT feeder funds, fund of funds. So it's just, I think it's just a matter of time until we see the REIT market in the Philippines evolve into into its fullest potential.
Thank you, Edoy. Ed, can I ask you to answer the question on the board? Says, given the downtrend performance of REITs, what makes hospitality REITs different, considering that it is also most vulnerable to investment externalities?
So I'm just reading the question. Generally, the downtrend of the REITs, because there was less demand and supply went down because interest rates were so high, di ba? It affected in general, not just REITs, but the equities market. That's why we had very little IPOs. The stock market was down because why will I put my money in a stock when I can get 7%, 8% investing in a San Miguel and Ayala corporate bond? Now I just continue getting my yields every quarter. But now that interest rates are going down, that's why the REITs and equities naman will turn around. And then baligtad naman, there will be a shift of asset investments, asset classes from fixed income to equity. So that explains the REITs. That's the first part of the question. The second question, yes, there is some vulnerability, but that's why, as my colleague said, that's why it's important that you study what you're offering. If you have, let's say, I'll just use an example. I like this idea kasi the big boys are already there. But let's say I'm just talking about the smaller players, the mid-market. Example lang, like our excellent moderator host in the corner, si Hanky. Ang ganda na ginagawa niya. Small pocket projects, but very well thought of, very well designed. So these things, maybe in general, you might say they're vulnerable because they're smaller, but because they're designed well and then there's a diversification strategy of different areas, they help each other. So those are things we just have to explain to the investors. But I'm still positive kasi nga, the big boys are there, the small boys, maybe just to add a little also, the capital market or your funding mix is not just REITs, as I have to admit. When you start out, you're really using your equity, di ba? And then later on, you can get bank debt. But you usually have to pledge the assets, pledge the real estates, pledge the cash flows. Once you mature a bit, that's when you can go to the REIT already, or you can even do an IPO. It's really part of the funding mix. But what I wanted to say is, these are now available because to a certain degree during COVID and during high interest rates, equities and REITs were parang not reachable by anybody. Now, it's a great market, and then especially with what Joey's saying, because we're very optimistic, and I'm seeing all the infrastructure plays, the airports, the roads. It seems all systems go. Unless na lang siguro China invades us or something happens with Ukraine. Those are beyond us. No? But generally, even with their politics, it's very stable. Diba? Parang things are going. So maybe let's take advantage of that and let's help each other. We want to help you grow, and we're here to support.
And we're expecting another rate cut. Would that be safe
Yeah,
to
there'll be
assume?
more rate cuts. Rates are on the 17th or 18th, because it's going to happen in the US, the Fed will decrease rates. It's a question of 25 or 50. Even if it's just 25, it's the signaling effect. It's going to be a downward trend. What does that mean for you as borrowers if you have loans with the banks? In the next 12 to 18 months, we expect rates to go down between 100 to 200 basis points. That's 1 to 2%. That's a big impact on your financing. Diba? So, and then that means also that people will shift now. You can borrow, you can expand. And then later on, that means people are going to shift it to the equities because fixed income is lower.
Okay, Joey, 2 questions for you here. Have your pick. Ano yung unahin natin? You mentioned tremendous growth in ADR by 40%.
Yes. Yeah, just minor correction. It's about 4 to 5% actually. So it's not 40%. 40% is the share of foreign brands, the total new for hotels that will be opening in Metro Manila. So about 4 to 5% based off about, if you're talking about 4 to 5-star hotels, so those are about $200 to about $400 per night. And especially if you're talking about Soler, which is the first 5-star hotel in Quezon City, that is pretty interesting. So these average daily rates across Metro Manila are growing by about 4 to 5%. But Anthony, I just want to share one interesting insight that we learned is that because of peso's depreciation, it appears that the average daily rates of Metro Manila hotels are getting more attractive, looking cheaper relatively compared to hotel rooms in Southeast Asia. So that's an interesting insight. And also, again, we're very optimistic because aside from that interest rate cut, which we first saw, the BSP cutting it by 25 bips, and then there are forecasts that the central bank will further cut interest rates by 2025 perhaps. And again, that will likely make the travel and tourism more competitive because if you look at the consumer spending subsegment, personal consumption, and if you further dissect that, the average Filipino spending on food and beverage, clothing, is either contracting or recording a flattish growth. But if you look at transportation, resort and hotels, recreation, these subsegments are actually growing. So that only indicates a very positive sentiment for the travel and tourism sector in the Philippines.
Thank you, Joey. My finance is here no, as they line up my capital budget for next year. Siguro naman, sabihin nila, tama pala yung sinasabi ko. No? Sabi nga ni Hanky, maboka lang ako. But anyways, quickly, we have a few minutes. Andoy, second question. Did foreign investors' appetite for PH REIT improve? How are we viewed relatively?
Relative to the most recent rate cut, we've observed improvement when it comes to foreign participation, foreign investments, foreign investor participation. And we see this pushing through, continuing through, again, because we're expecting several rate cuts before the tail end of the year. How are we viewed relative to S-REITs, Hong Kong REITs? Again, we are still at the infancy stages, so I think it's not yet fair for us to compare our market versus the more matured Hong Kong and Singapore industries. But what's good about this is not me plugging, but what's important here is we provide access, as Ed mentioned, to our investors. So if you're the type of investor who's looking to invest in REITs in the more developed and the more mature economies, we have this facility called FundSmart. apart from stocks and bonds and real estate investment trusts. That facility will provide you access to both peso and dollar denominated mutual funds, unit investment trust funds, feeder funds, fund of funds. And we have several fund partners who can provide you access to not just Singapore and Hong Kong, but basically Asia Pacific and global REITs. So if you're looking to diversify your REIT portfolio outside the Philippines, you might want to look into, again, researching more about Asia Pacific and global REIT funds for you to be able to get access to the more mature REIT markets out there.
Thank you, Andoy. Last question for Joey before we do the roundup. No, sorry, Ed. Are PH cap rates at par with the CN or are we cheaper? How do investors view this?
Okay, it depends on which side are you. Are you the investor or you're the issuer? Okay, I assume in this room, you are the issuers. From your perspective, you want the lowest possible funding. You don't want to pay as high. Diba? Kasi the foreign investors will put a premium for Philippines. So if I were working for you or BDO or Metro, example lang, if I were a foreign investor, they'll say, I want a minimum 9-10%. Okay. But if you only, let's say, need 500 million pesos for your expansion, but it's a good project, diba? The foreign will ask for 9 or 10, but I'll say, okay, then let's do a peso only, domestic only, because Filipino investors are willing to take more risk because they understand Siargao, for example, or they understand Hanky's project, his curated project. So therefore, I think I can do it at 9% or 8%, cheaper than what foreign will expect. So it's successful. I raised 500 million at 8%, example. Is that a success from your perspective as an issuer? Yes, because I raised it 2% cheaper. Is it a success from an international? They might say, "Uy, the Philippine REIT is only lower, not as successful as a foreign." But I don't care because you're my client. I raised it cheaper for you. So we target for the investor, not for the issuer. For the issuer, not for the investors. Because if there's a meeting of the minds, but the objective is to price it, simple economics. I want to price it as low as possible to meet demand and supply. So it's not as successful because some of our REITs are yielding surprisingly very close to government. But remember, when you talk naman about the mega worlds and the Ayalas, that's almost like you can sleep because you're so comfortable with them. So that's why they're surprised sometimes why the Philippine companies can raise money so cheaply compared to their corporate peers abroad. But that does not mean that it's not a success. It's just a success from the issuer perspective.
Thank you. And now for the final pitch. Before we wrap up, can I ask for final words from our distinguished panel members, Joey and Ed and then Andro?
Well, I think for the hotel sector in the Philippines, there's a lot of upside given that the Philippines is one of the fastest growing economies in Southeast Asia, 6.3% last year, making the Philippines the second fastest growing economy in the region. We have a young demographic that we continue to really contribute to the Philippine economy. The Gen Z, the millennial employees, BPOs that continue to contribute to a more robust staycation market in the Philippines. Interest rates are going down. Inflation is still quite elevated, but we hope that this further eases so that it entices Filipinos to spend. But again, as I mentioned earlier, it appears that elevated inflation is not a concern for Filipinos. They continue to travel, especially those that are encouraged by impulse travel. And again, infrastructure connectivity will be crucial in further stoking demand in the travel and tourism sector. Again, we believe that if you are to succeed in the REIT game, diversity is key.
Thank you. And I know you're flying out after this one.
Yes.
Yeah. No, just to keep it short, I just want to say I'm very happy that you're continuing to expand, continue to invest. We're very optimistic. I am personally optimistic. I could have stayed in the States or anywhere else, but I came home 25 years ago and I believe in it. I encouraged my children to come back from the States and Europe to work here, and they also are doing the same thing. I believe in the Philippines, so we're here to help you.
Andoy?
Well, from my end, Joey, Ed, they talked about the potential. Ako, I look at it from, it's a very rosy future for the sector. And the government, no less than the Philippine national government, is very supportive. We have lots of major projects providing us better, faster, more efficient access to CBDs, outside CBDs. You have the subway project ongoing. You have several, MRT, LRT lines connecting the metro to outside the metro. So when you talk about potential, when you talk about room for growth, when you talk about enhancements, and when you talk about the potential for the hospitality and tourism REITs, as I said a few minutes ago, 5-6 years from now, I think we're going to see a lot of iterations, a lot of options for you to choose from in the universe of REITs.
Thank you very much, Andoy. Thank you very much to all of you. And I think underlying message, the future looks good for all of us. But as Ed mentioned to us also and reminds us, we have to do our own homeworks. Again, thank you very much. Thanks to Joey, Ed, and Andoy. Hanky?